Welcome back. You're watching Market Cafe on India. Now let's keep it going and get more domestic and talk about what's happening on the D Street. Now, BSE crossed the 400 lakh crore market cap. Now D Street continues to party at live highs, and this run has taken BSE's listed universe market cap above 4 lakh crore rupees. 400, I beg your pardon, lakh crore rupees. 4 lakh is too less for that for the first time ever. However, incremental demat account, when you're looking at that, that slowed down second consecutive month. Now, what is the analysis behind this? How is this shaping up? And demat accounts reducing, BSE market cap increase. Sharad is joining with us to give us that analysis.
Well, a very interesting update coming in when it comes to BSE listed companies. Their market cap that has touched the 400 lakh crore mark for the first time. Interestingly, these important milestones, if you have a look, for March 2014, it was first time it had hit 100 lakh crore, and it took 7 years to reach the 200 lakh crore figure. But after that, the pace has been very fast. You can look at almost it took 2 years to jump from 200 to 300 lakh crore, and even less than a year, if you look at the numbers, it has jumped from 300 lakh to 400 lakh crore rupees. And of course, benchmark indices are also at their all-time high levels. And interestingly, if you look at the BSE 500 index top movers, there are certain names coming from the defense and the PSU segment being at the top, almost 350% up. And these are the numbers since July 2023, since the last time BSE's total market cap listed companies had hit the 300 lakh crore mark. Cochin Shipyard, Hudco, NBC coming into the list. And also we are having SGVN, MRPL also giving almost 2 to 3 times returns to the shareholders. Also we are having Investment and Kalyan Jewellers making it to the list. So this is the overall euphoria, you could say, or a rise in the market cap of the BSE listed companies. On the other hand, let's look at the demat additions. That's a big number. Overall, the 15 crore addition has happened in the total numbers coming in the month of March itself. But there is a slight dip when it comes to the incremental demat account additions. And of course, February and March month did see a lot of volatility happen. And that itself, if you look at it, for the second straight month, the incremental demat accounts actually fell. Now, if you look at the numbers, it's down 28% on a month-on-month basis when it comes to the incremental demat accounts. Well, the total demat accounts itself also kind of, the growth tapered down if you look at it on a month-on-month basis. So this is the overall two sides of the coin. One side is the market capitalization going up, while the other side, the incremental demat account additions, that has been slipping.
All right, thanks Sharad for that update coming in on BSE's market cap. But moving away from that then, AstraZeneca and Daiichi-backed drug Enhertu gets US FDA's nod, becomes the first drug of its kind to be granted approval. My colleague Snehi Shah is joining in with more details. Snehi, tell us a little more about the broad tumor approval for Enhertu.
Well, yes, AstraZeneca is in focus because AstraZeneca PLC and Daiichi Sankyo's drug Enhertu has become the first drug of its kind to be granted approval to treat tumors anywhere in the body if the patient tests positive for a protein known to speed up cancer growth. Now, the US FDA has cleared the medicine for patients who have the HER2 positive solid tumors that have spread all over the body or cannot be removed by surgery. Now, what is this Enhertu drug and why is it such an important for AstraZeneca? Therapies deliver high medicine doses directly to the tumors while minimizing damage to the tissues that surround the tumor. And the field has attracted drug makers including Pfizer and Johnson & Johnson. A lot of big pharma players have been trying to develop a similar drug. Now, this drug is already approved for multiple other indications including breast and gastric cancers as well, and it also has immense opportunities to scale up sales in the US and Europe as well. So on the back of this positive news flow that's coming in, AstraZeneca will be in focus.
Absolutely, Snehi. Thank you so much for that. But let's move on. And the manufacturing must grow 16 times in the next 23 years for India to achieve Viksit Bharat goals. That's the word coming from Mahindra Group CEO Anish Shah talking to ET Now's Anurag Joshi. He said that there are still some pockets of economic weakness, which are being addressed. Listen in to what is he saying about it, where does he see it headed. Listen into the conversation.
FICCI is playing a key role now in terms of the Viksit Bharat agenda that has been laid out by our Prime Minister. 4 primary focus areas for us. First is Make in India, women-led development, farm prosperity, and sustainability. And across each of these has been significant progress that has been made. And that's part of the contributions that FICCI would like to make to nation building.
We're also seeing a bounce in the Indian economy. So, how does this translate for various sectors like automotive, financial services? Overall, how do you, as a CEO, what is your outlook?
So we are seeing a strong growth rate across all sectors. There are pockets of weakness, but our sense is that that will be addressed as we go forward. And this is a time for India. India is really poised very well. The government is focused on ease of doing business. We are seeing a lot of foreign investment come in as well. As a CEO in India, we are very bullish. We are looking at tremendous amount of investments that we're going to make over the next few years. And we've done some of that already. We've doubled capacity in our auto business. We've added 6% more in our farm business. We're looking at tripling the number of resorts we have. And I can just go on. I think this is the time for India today.
One last question. What role and contribution you see for India INC towards the Viksit Bharat goal?
I see first tremendous opportunity. And this is an opportunity for India Inc. to really grab, because if we have to grow to meet our Viksit Bharat goals, manufacturing has to go up 16 times in the next 3 years. And therein lies the opportunity for Indian business to be able to take that and take it forward. Capital is available today. It's all about execution. It's about making world-class products and making in India for the world.
Okay, let's move on and actually talk about Tata Motors JLR. They came out with their Q4 update. So looking at the updates as of now, wholesale numbers for Q4 FY24 grew by around 16% on a year-on-year basis and 9% on a sequential basis. Retail sales saw an uptick of 11% YOY and 5% on a quarter basis. For the full year also, JLR actually managed to see a 20%. It's an interesting number there. The numbers are reflecting, when you look at it, that there is an improved production and sustained global demand that one is seeing. So yes, we're seeing increase in terms of overall retail sales, wholesale sales numbers, double-digit growth, both comfortably there on a year-on-year basis. Those single-digit, mid-single-digit to high single-digit growth on a sequential basis. When you look at it in terms of brand-wise, like you can see on your screens as well, for the wholesale volume numbers, Range Rover is up 22% of volumes. We do have Defender, which is up 5%, Jaguar 39%, and Discovery almost 1%. So that's interesting there. While in terms of retail sales compared on a year-on-year basis, we are seeing that in terms of the geography wise, China is seeing a bit of a subduedness, as well as Europe. That's also down almost 2%. Other than that, UK, North America, as well as other overseas are up almost 16%. What we're seeing a decline in is in China as well as Europe. So yes, we're keeping an eye out on Tata Motors JLR Q4 numbers that have come in terms of the wholesale as well as the retail sales.
Absolutely, and it's very interesting to see what the brokerages are flagging out as well for Tata Motors, because if you see the coming in from Morgan Stanley, then they're maintaining an overweight. Macquarie as well as Morgan Stanley are quite bullish on the counter, but when you're seeing what Stanley is saying, they have an overweight the target at 1013, and they're talking about, in terms of the growth roadmap, they're talking about how the slower EV adoption is positive for FCF as well as capital profile for the company, and they're also saying that the fast EV shift could have been highly disruptive, so that is not something that they're seeing happening as of now, and this is a key positive for Tata Motors. Now, looking at what Macquarie is saying as well, Macquarie is also bullish on the counter. They're maintaining an outperform rating with a target at 1028. And in terms of the JLR division, they're talking about how JLR Q4 was a modest beat on the wholesale side of it. And in fact, for the EBITDA margin, they're seeing a flattish quarter-on-quarter EBITDA margin. But they're saying that the company, in terms of the net debt reduction, they're quite positive, because they're talking about how the company can be reducing net debt to less than 1 billion euros for financial year 25. So that's the kind of commentary coming in from Macquarie as well on Tata Motors.
Okay, that is on Tata Motors, but let's move on to talk about the insurance side, and let's talk about the non-insurance life sector, which has shown a growth of double-digit growth of around 16% when you look at it in FY24. When you look at in terms of the non-premium that has grown for FY24, that's also seen recent growth in terms for the premium of non-life insurance. When you are seeing in terms of the numbers that are shaping up for the private sector general insurance companies, that showed a growth of 17.5% on a year-on-year basis in FY24. PSU general insurance saw a growth of 9%, while standalone health saw a growth of around 26.2%. Star Health premium specifically, that saw a growth by around 18%. That would say we did ICICI Lombard, that also seeing a growth of 18%, and New India Assurance was almost flattish in terms of growth. But India Assurance's premium growth, I would like to highlight, that saw a growth of around 7.4%. So yes, keeping an eye out on that. How this is shaping out. But as far as this is the update that is coming from the non-life insurance space, and that's why we'll be keeping an eye out on some of these names as well. The data did come in last evening, will be a key factor to watch out for if we do see any terms of a move coming in there. But as of now, the non-life insurance industry has managed to see a double-digit growth again.
Absolutely, and it's very interesting looking at this data. But moving on then, this time around, India's Lok Sabha poll costs are likely to be highest till date. According to research, it's possible that India's elections could even exceed the amount that is likely to be splurged on the White House race. My colleague Bhavya Dua is here with all of those important details. Bhavya? Staying tuned into Market Cafe, let's take a look at the futures and options round then, and Ansh is joining in with that snapshot. Ansh?
Hi, so let's start with Nifty first. Index touched record level in the previous session, but most importantly, it gave a decisive break from that key resistance of around 22,550, which was intact from last 1 month. This keeps the bias very positive till 2,550 level stays protected on downside. In index future, we are seeing open interest increasing by around 8%, indicating long build-up, which is a positive sign. Whereas on option front, we are seeing buying happening at 22,700, which indicates that option traders are expecting Nifty to go above this level. Whereas on downside, we are seeing put writing happening at 22,600, indicating strong support base around this level. Let's also talk about India VIX, and we are seeing that India VIX is almost at this low, which is positive for market as well. Moving on to Nifty Bank, index touched record high level for the first time in last 3 months, but the RSI is at 70 for the first time this year. This indicates a bit of overbought region, and index is just 0.9% away from its key resistance of 49,000 level, so upside looks limited here. Whereas on option fund, we are seeing put writing happening at 48,500, indicating very strong support around this level. Lastly, let's have a look over F&O stocks that will be in focus, and we are seeing Exide Industries, Info Edge and M&M having a good long build-up, whereas short build-up in REC. So keep an eye on the stocks.
Okay, Ansh, that's about the stocks on the F&O front, but what are the stocks that one should watch out for in today's trade on the back of news flows or Q4 updates, anything that you're finding interesting?
Right, so starting with SJVN, the company's wholly owned subsidiary SJVN Green Energy has signed a joint venture cum shareholders agreement with Assam Power Company Limited Distribution in the ratio of 51:40 for development of renewable energy project or parks. Apart from this, Yes Bank will also be in focus as they have received around 244 crore from a single trust in the security receipts portfolio sale of NPA portfolio to JC Flower ARC on 7 December 2022. Dilip Bilkon will also be in focus as the company has declared as L1 bidder for a tender floated by Haryana Rail Infrastructure Development Corporation on EPC mode in the state of Haryana for an order worth around 1,092 crore. Dixon is also in focus as company has entered into share purchase agreement and shareholders agreement for proposed acquisition of majority stake in Ismartu India Private Limited. Ismartu is engaged in electronics and mobile devices manufacturing actually. PCBL is also in focus because a 12 megawatt power has been commissioned by PCBL TN Limited, a wholly owned subsidiary of the company in the state of Tamil Nadu. With this, the total capacity stands at around 122 megawatt. So keep an eye on the stocks.
Absolutely, Ansh. We'll keep an eye on all of those counters in today's session. But moving on then, block deal action continues on the Lal Street. Several companies, including Gland Pharma, Axis Bank and others will see block deal action today. Sharad is joining in with that update. Sharad?
Well, yes, the deal-making buzz is active in the street, and foremost is 2 block deals are opening. The first one being Gland Pharma, where its ex-promoter Dr. Ravi Penmitsa will be selling his complete stake of 4.93% stake across 2 entities where he has stake, and the deal itself would be roughly 1,400 crore rupees. Looking at the floor price, that's coming at roughly 1,725 rupees per share. That's coming at a discount of almost 7.3%. Also, Axis Bank would be in focus as Bain Capital will be looking for its complete exit as they're likely to sell 1.08% stake, which the value comes at 3,575 crore rupees. The offer price is at 1,076 rupees per share, which is almost at the current market price of the closing rates which was there yesterday. And importantly, over the last 2 years itself, Bain Capital has been reducing its stake in Axis Capital, and analysts are stating that the selling pressure would be over for Axis Bank when it comes to Bain Capital. Also, Shilpa Medica QIP is opening, roughly 500 crore is the expected size, and the issue price is at 477 rupees per share, which translates to a 6% discount. Another QIP from Sterlite Tech is opening, roughly 1000 crore size is expected, and the floor price is at 119 rupees per share, which translates into a 7% discount. Also, one QIP has closed. It's a small cap company, Orion Pro. Roughly they have raised 377 crore rupees, but there are certain marquee names which I'd like to point out, which include Malabar Fund, Alchemy, and even Goldman Sachs, adding it to the investor list. So a whole lot of block deals and QIP issues are in focus today.
Okay, Sharad, thank you so much for that. But wait on with us and let's take a look at the FPI flows for the second half of March as well, which the sectors have actually seen inflows. Sharad, take us through those details as well.
Well, yes, important update coming when it comes to the FPI outflows, and this is coming for the second half of March, or the last 2 weeks. And importantly, $776 million of outflows have been recorded, and there are certain segments where continued inflows have been there, such as auto, capital goods, consumer services, realty, and even IT segment. Now, importantly, telecom, they have received the highest number of ever inflows of roughly almost 960 million in the month of March itself, but a strong reversal coming when it comes to the chemical segment, where they received inflows of roughly $110 million. A strong reversal coming in after 9 straight months of outflows. So that is something to watch out for. And also the sectors where you look at the FPI holding, which is at its highest level since January 2020, they include autos, capital goods, construction, realty, consumer services, and even the healthcare segment. Now let's look at the three important sectors where the inflows have been the highest over the last 2 weeks in the month of March itself. And over here we look at capital goods, metal mining, and chemical segment, where more than $100 million of inflows have been recorded. While on the other side, if you look at the outflows over here, FMCG has been at the top of the pack with almost $595 million of outflows coming, followed by the auto segment, roughly almost 250 million, and financial services also saw outflows of roughly $221 million.
Well, thanks, Sharad, for that update. Well, that's quite the interesting data set. But let's also move on, and as promised, let's get you the list of stocks that are on brokerage radar as well. Gaurav is joining in with that list. Gaurav?
Well, yes. First, let's begin with Reliance Industries, because now Morgan Stanley has maintained its overweight rating and given a target price of 3,036 rupees for the stock. So what they believe is that there are multiple levers for re-rating in the company. So for example, new energy segment, refining segment, chemical segment, and telecom segments will see some kind of re-rating in the days coming ahead. At the same time, they also believe that in FY25, there will be positive catalysts like net debt reduction, and at the same time, we have also seen that capex plans have been slowing down for Reliance Industries, which will again play at the positive side for Reliance Industries, and that is why this bullish is coming up from Morgan Stanley. Let's also talk about Paytm now, because Bank of America has resumed its coverage with underperform rating at a target price of 400 rupees per share. What they believe is that we will see some kind of earnings recovery and re-rating to come after 2 or 3 quarters, because Q4 numbers are specifically going to be a little weaker, and they also believe that we may see bottoming out of this revenue in Q1 FY25. At the same time, they are expecting Paytm to achieve EBITDA break-even in FY27 now, and net income break-even point in FY28, and that is why this little bearish view coming up from Bank of America. Next, let's talk about some of the catalyst watch that Citi has given. So first, let's talk about DSPL, where they have given downside 90 days catalyst watch with a target price of 685 rupees, because they believe that we may see some kind of weak volumes. Q4 weak volumes may surprise us on a negative side as per Citi, and at the same time we will see limited pricing upside for the company, and that is why they are being a little bearish on this. And lastly, let's talk about Industries, where they have given upside 90 days catalyst watch with a target price of 4,500 rupees, because they believe that management guidance is likely to be remained intact for FY25 as well, and at the same time we may see 15% growth in terms of revenue from CSM from here on, and that is why little bullish view coming up from Citi on PI Industries. So on back of these brokerage notes, we will keep an eye on these stocks and see how they perform.
Okay, Gaurav, thank you so much for that. Surely keeping an eye out on the brokerage notes this morning, but Q4 updates, that's surely pouring in. What are they looking like today? Stocks are in focus on the back of these Q4 updates. Ashesha is joining you with us. Ashesha, good morning.
Well, yes, first let's talk about Sula, which reported operational updates for the quarter gone by, and revenues for fourth quarter have seen an uptick of about 10% on a year-on-year basis. Elite and premium brands led the way up for the revenue because this segment saw an uptick of about 15% on a year-on-year basis in the fourth quarter. As far as their segment-wise performance is concerned, wine brands revenue was up 9% YOY, wine business revenue was up a whopping 31% on a year-on-year basis, and apart from this, they've also informed the exchanges about an acquisition where they said that they've acquired wines in Gujarat and the integration is likely to be completed in the first quarter of FY25. So on the back of operational updates as well as this acquisition that the company has announced, Sula will be in focus. Moving on to two companies that reported their first quarter FY25 results, and in that first we have Popular Vehicles. Remember, it is a recently listed entity which reports its numbers. Revenue from operations were up 16% in the fourth quarter on a year-on-year basis. Margins have expanded a tad bit. They've come in at 4.3% versus 4.1% that the company had reported same time last year. So on a year-on-year basis, margins have expanded by nearly 20 basis points. Moving on to Cupid then, a smaller counter, we don't usually talk about this company, but revenues have seen a solid uptick of 52% on a year-on-year basis. Margins have also expanded a whole lot. EBITDA margins for fourth quarter stood at about 49.2% versus 25.5% that the company had reported same time last year, and profit after tax has more than doubled. It has in fact come in at 24 crores versus 9 crores that the company had reported same time last year. A very strong set of numbers from Cupid. Keep an eye out on this counter as well.
Alright, thanks Ashesha. So we'll keep an eye on all of those counters in today's trading session, but that's all the time we had on this edition of Market Cafe. From me, Shriti Singh, Vinny Motiwala, as well as the entire team that put this show together. Thank you so much for watching. But you don't go anywhere because the market takes all of the action forward.